With the housing market, in terms of price at least, going from strength to strength, what are the real drivers given this higher for longer interest rate scenario? Well, he's at the coalface, and Anthony Landahl from Equilibria Finance joins me now. Anthony, hi, welcome.
Nice to be here.
So what are we learning from the most recent data?
What we're learning from the most recent data is we've now had 15 consecutive months of growth since back in April 22 when we
Price growth
had
is
the
what you're saying.
Price growth. Since we had that the market trough, we've had 15 consecutive months of growth. It's grown over 10% nationally since then, and we're seeing that in both the capital cities and the regionals. More recently, the last 3 months, we've seen about 1.8% growth across the combined capitals. This is mainly driven by Perth, Adelaide and Brisbane, but we're seeing it nationwide essentially. So the market keeps growing. Your previous guest was talking about some of the inflationary pressures, and obviously with the housing market growth, supply shortage, we've obviously seen rental growth as well over the last 12 months in and around the 10% mark. So a lot of pressure on the housing market. And yeah, we've had 15 consecutive months of growth again.
All right, so we've also had a Domain house price report pointing out what's happening in terms of units versus house prices. So how is that impacting the market?
Yeah, I think this is quite stark, just to point out that, for example, in Sydney, the median house price is now over $1.6 million. And that's twice the median price of a unit, which is about $800,000. Sydney's probably the most stark example. 22% of houses are now under $1 million. So if you flip that around, close to 80% are now over $1 million. So what it's meaning is it's making it very difficult for upgraders trying to move from a unit to a house. If their family's growing, they're looking at moving into other regions. They might be looking at townhouse options, or in fact they're looking at they can't afford a house and they might be starting to think about, do they actually buy an investment property? So it's really starting to affect those people who are looking at upgrading from maybe their first home into a house to bring up the family, and maybe they're looking at other regions, looking at other options and looking at the bank of mum and dad as though they're a first home buyer again almost.
Yeah, all right. So just following on from that, what are we seeing in terms of investor demand? Are we seeing a lot of investor buying?
Yeah, investor credit growth's up about 20% on the last 12 months. And interestingly, that's being driven by rent investors at the moment. About 46% or just under 50% of investors at the moment are in that age bracket of, I guess, the generation we call millennials, who traditionally would be looking for a first home to buy. But that has shifted where they're going, look, we can't afford to buy where we want. Let's live where we want and buy an investment property. Mm-hmm. It's shifting a little bit what they're looking at as well. They're often looking for a house rather than a unit in other regional areas. So that's areas in Sydney, for example, like the Hills District, that are starting to get investors in there where traditionally they may not go. So the investor market's a bit split between your traditional investor looking for that long-term capital growth, the rental yields and managing their cash flow on the way through, to this generation of close to 50% of investors at the moment are those who their first property is an investment and they're looking at other areas that maybe they live in down the track. So maybe that capital growth and rental yield is a secondary consideration.
It's amazing. We're going to be a nation of landlords who don't own their house, or, you know, it's societal. It's huge societal changes that this is inspiring.
It is, and the fundamental chronic supply shortfall is really underpinning a lot of this behaviour.
All right, so that makes me think of the budget. Budget is upon us. We always hear politicians trying to address the supply shortage, trying to bring house prices down, because they know that everybody's getting a little bit fed up. Maybe not all the landlords, but you know, it's everywhere on my feeds. It's everywhere in the news. You know, what are we leaving our children? So what are you expecting in the budget, if anything?
Yeah, I think housing will play a reasonably significant role. The government, when they came into government, committed to building 1.2 million houses over the 5 years through to 2029. We're well and truly off that mark. Whether that's even achievable is questionable. But I think what we'll see often in the past in these budgets, there's been focus on affordability, on first home buyers, on programs around accessing superannuation or first home loan deposit schemes. I think we're also going to see some focus on the supply side on the construction side, around apprenticeships, helping get people into the construction industry. So offering some incentives around apprenticeships for young people wanting to get into construction. And I think as well there'll be some focus on providing some incentives for those looking to invest in particularly units and houses that can be built in a relatively quick period of time. So I think we'll see more focus on providing supply in this budget, and I think housing will play a reasonably significant role in that because of this chronic shortfall and the government's commitment to building 1.2 million homes through to 2029.
If it's possible.
If it's possible.